Meta just jumped on their earnings report. Most people saw the headline, nodded, and moved on, but that's exactly the problem. They think the move already happened, that it's too late, that this was just a good quarter and the upside's gone. I bought this stock back in April and I'm sitting on 48% gains while most investors watch from the sidelines. Not because I got lucky, because I understood what the market was missing. See, Meta didn't just beat expectations, it exposed a bigger truth, one that caught nearly everyone flat-footed. Revenues are up, margins up, users up, AI performance surging across every app, and underneath all of it, a shift that most people still don't see. So the real question is not, did Meta have a good quarter? The real question is, what did they just unlock that you haven't figured out yet? Let's get into it. Meta didn't just have a good quarter, they just made it painfully obvious that they're operating on a level most people still don't understand. Revenue didn't just grow, it accelerated. $47.5 billion this quarter. That's 22% year over year, and no, it wasn't from some flashy new product or short-term boost. It came from doing what every competitor talks about, but Meta actually executes, turning scale into dominance. Ad impressions up 11%, ad prices up 9%. That's volume and pricing power moving together. That doesn't happen unless your system is working perfectly, and it is. Now, here's what no one wants to admit. A few years ago, Meta went all in on the metaverse. They even changed their name. It was a massive distraction. Billions were burned. Wall Street hated it. But this quarter, that noise is gone. They've quietly abandoned the narrative, and for good reason. They're back to basics. Ads, data, AI, attention, the stuff that actually prints money. This wasn't a pivot, it was a correction, and it worked. You know what most platforms do when they grow? They get sloppy. Ads become noise, targeting gets worse, results drop. Meta's getting sharper. The ads are hitting harder, the system is getting smarter, and the distance between them and everyone else growing by the quarter. This isn't about North America. The growth came globally. The rest of the world, Asia Pacific, Europe, that's not a rebound, that's an optimized machine scaling internationally. And Wall Street, still trying to value it like a social media company. No, this is an ad performance empire with leverage baked into the code. Most investors are still out there watching product launches and headlines. Meanwhile, Meta is quietly turning attention into profit at global scale, and they're not even breaking a sweat. If you don't understand what that means, then you don't understand the game. And here's what no one's talking about. Revenue is just noise if it doesn't drop to the bottom line. That's why every earnings seasons you see companies brag about growth while quietly bleeding cash out the back door. That's not a business, that's a burn rate. Meta, a completely different animal. This quarter, they posted $20.4 billion in operating income. That's up 38% from last year. Operating margin, 43%. That's not just good, that's elite. Most tech companies would kill for 20, and they're doing it while investing billions into AI infrastructure. They're not pulling back. And let's be real, any idiot can sell ads when money's cheap and customer acquisition is easy, but doing it profitably, at scale in this environment, that's rare, and that's the point. Meta isn't guessing. They built a machine that spins attention into cash with margin. They're not squeezing growth by cutting back, they're adding fuel. Capital expenditures hit $17 billion this quarter. They're building for dominance and still printing billions in free cash flow. So here's the punchline. Wall Street still sees this as a social media company. Retail investors think it's an AI trade, but what it really is a cash compounding engine wearing a hoodie. Meta's not just big, it's profitable at a level that makes most companies look like side hustles. If that doesn't change how you look at this stock, nothing will. Now let's cut through the hype. Every company is slapping AI into their earnings calls, hoping the stock moves. But here's the difference. Meta's AI isn't a narrative, it's already driving revenue. This quarter, 30% more advertisers used Meta's AI-powered creative tools. Their new AI ad model for Reels, it's already delivering a 5% boost in conversions. That's billions in potential upside from one model in one format. This isn't about the future, it's happening now, and the impact is measurable. More time spent on Facebook, more time spent on Instagram. Threads just saw a 35% jump in user engagement, and it's barely getting started. Meta isn't building AI for headlines, they're building it to lock in attention, raise ad performance, and automate the entire marketing funnel. And here's the scary part for everyone else. They already have the scale to train it better than anyone. 3.5 billion users, a fire hose of behavioral data, decades of feedback loops. Every impression makes the system smarter. Every click improves the model. Every dollar spent improves the next campaign. That's the flywheel, and once it starts turning, it doesn't stop. So Google's scrambling, TikTok is reactive, Apple still wants a cut, but Meta, they're writing the playbook in real time. And if you're still thinking of this company as just a social media platform, you're going to miss the next $100 billion they pull out of thin air. Now there's one part of Meta that's still burning cash, so let's get real. Meta has one giant weakness, and if you ignore it, you're not doing real analysis. It's called Reality Labs, the division building VR headsets, smart glasses, and everything that used to be called the metaverse. Remember that? Yes, the thing that they renamed the company after. Well, here's the truth. Reality Labs is still a money pit. This quarter alone, $4.5 billion in operating losses. For context, that's the GDP of some countries. Gone. Every 3 months. And then there's Llama, Meta's large language model, their answer to ChatGPT. It powers their personal AI assistant and gets baked into their apps. But here's the problem. Right now, it's just another chatbot. There's no real monetization strategy, no proof that it creates revenue, no moat that OpenAI, Google, or Anthropic couldn't copy. In other words, it's not a product, it's a research project, and a very expensive one at that. So why does this matter? Because even great businesses get punished when they pour billions of dollars into dreams that don't pay off. Investors have a short memory and even shorter patience. Meta made a big mistake chasing the metaverse, and while they've pivoted publicly, the cash burn behind the scenes hasn't stopped. Now here's the good news. This quarter showed that Meta doesn't need those projects to win. They're dominating through their core business, ads, attention, AI, with or without the headset, and with the chatbot. But let's be clear, Reality Labs is the anchor, and Llama, for now, is just noise. Until those things turn into profit, they're risks, not reasons to buy. So if you're here for the long game, this is the only question that matters. Meta has pulled off one of the cleanest pivots in tech history, from overreaching on the metaverse to doubling down on what works, monetizing attention at global scale. So is it a buy? Let's start with the bull case. Meta owns the infrastructure of digital behavior. Facebook, Instagram, WhatsApp, Threads, 3.5 billion people every day. They've rebuilt their ad platform with AI that actually improves performance, not just in theory, but in revenue. They're printing $20 billion per quarter in operating income. That's not hype, that's dominance. And they're still investing for the future without compromising profit. That's rare. And now the bear case. Reality Labs is still draining billions with no path to profitability. Llama, their AI model, isn't generating revenue yet, and it's late to the market. They face massive regulatory risk in the EU, and they're increasingly dependent on Chinese advertisers like Temu and Shein to juice growth. So what's the truth? Meta is a wide moat business that got humbled, focused, and came back swinging. They control the attention, they monetize it efficiently, they're now deploying capital better than almost anyone in the market. Yes, they're still burning cash on long shots, but the core engine is so profitable, it's buying them time to figure it out. The bottom line, if you're looking for a company that can generate real cash, compound at scale, and get stronger as it grows, this is it. Meta is a long-term buy. Let me make this simple. I bought Meta back in April, and if you're in my Patreon, hopefully you did as well. I'm up 48%, not because I timed it perfectly, because I understood what I was buying. And after this quarter, that conviction just got stronger. Here's the real question. Is the business getting stronger every quarter? Yes. Are the numbers trending up across customers, revenue, and cash flow? Yes. Is the product becoming harder to compete with? Absolutely. That's what you bet on. Not stories, not headlines, not hype. Execution, margins, moats, and momentum. Meta has all of them right now. While everyone else is talking about AI, Meta is already converting it into profit. They've abandoned the distractions, scaled the core engine, and are now widening the gap on every level that matters. And if you think it's too late to buy, that's the same thinking that kept most investors out back in April. This isn't about timing, this is about direction. The business is pointing up, the execution is compounding, the system is working. That's when you build a position. My thesis is bullish. I'm holding and I'll be adding to my positions because once you understand how rare this level of performance is, the only mistake left is not owning it. And everyone's talking about AI, everyone's quoting headlines, reposting charts, pretending to understand strategy. But when it's time to actually take a position, they freeze. Or worse, they follow the crowd and call it conviction. Meanwhile, I'm breaking down the margin story no one's explaining. I'm showing you where the real leverage sits, and I'm putting real money behind it before the market wakes up. Not next quarter, not after the move, now. That's why I bought Meta back in April, and why I'm sitting on a 48% gain. It's why my portfolio is up $1.88 million this year. That's 53.88% year to date. And it's not just me. One of my patrons, Freaky Trout, managed a tough HIMS cash secured put through a price drop and walked out with a $250 gain in 45 days, which is 36% annualized. Most investors would have lost money on this. He didn't. And Amex cleared over $1,000 in less than a month. No guessing, just execution. That's the power of having a system. That's the difference between panic and profit. Inside my Patreon, you get real-time trade alerts with full breakdowns, the how, the why, the exits, daily market insights, stripped of fluff, focused on momentum, and the exact framework I use to build seven-figure positions with discipline. It's $30 a month, and you spend more on junk you can't write off. This is one tool that can pay you back. Do you want to know if it works? That's why I'm up $1.88 million this year. This isn't theory. This is real capital, real returns, and real risk managed with conviction. So if you've been watching these videos nodding along and telling yourself, I should probably join, it's time. Stop watching, start building. Because here's the truth. You can scroll or you can scale, but either way, don't say you weren't told.